Good morning, everyone. Good morning and welcome to the Trading Success Blueprint, a beginner's online trading webinar. My name is Danny and I will give you the webinar today. Okay, so to begin with, we will first explain how the webinar is going to happen and then we can begin. So the first part will be more of an introduction to the company, the services, what we have here in the facility, some functions here that can assist you. We'll make it a bit more accessible. We'll go through what we have here, what we have on that side as well. Okay, the second part will be more practical. It will be the majority of the webinar, and it will be about the basic fundamentals for trading. Of course, those basics doesn't mean that it's beginners online. It things that we're using as professional traders, and of course, it's worth refreshing, even for the people who are experienced. All right. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, a very frequent question is if after the webinar a recording can be sent. And I always say that you can find the recording of this webinar in our YouTube channel. So you can go to YouTube, search AvaTrade, and then you'll find a lot of content library filled with recorded webinars for you guys to watch again whenever you want. All right, okay. And as I was about to, as I said before, we will begin with an introduction to AvaTrade. AvaTrade is a regulated company. We're here since 2006. Currently, we have 9 licenses worldwide. In case you got a question or a query, you can address our customer service on this address or through the live chat at the bottom left right here. You have chat with us or WhatsApp for you to use, whatever you prefer. Besides the customer service, you can also receive assistance from a senior account manager, which can be assigned on your file depending on your eligibility. So customer service is assisting with all the customer service, naturally, and a senior account manager can assist you with the trading side. So that means anything's really related to trading, perhaps a plan, assistance with calculations, assistance with going through this interface here, trading details, anything you want, the senior account manager is there to provide you with. Now, the platform we're looking at is not something that I have to install on my computer. It's actually, as soon as you are logging into the website with your email and password, this is what you're supposed to see. It's called the Web Trader. And we have the trading app as well. So this is an desktop interface. This is the desktop platform, but there is also a very similar app in the App Store. Okay, depending on which device you're using. Actually, I'd like to put that last because I also want to write down the other platforms we have, which is MT4, MT5, Ava Social, and Ava Options. Now, because this is a webinar for beginners, I think it's appropriate to say a few words about Ava Social because it has the core features that it has are specifically can assist beginners. And the reason is that it allows you, just like a social media platform, okay, Ava Social allows you to follow or copy another trader. And the way that it works is, let me just go outside. Okay, you get to pick from some lists which one you would like to follow or to copy. Follow means that I'm going to get notifications with the positions that the person, let's just quickly here separate that bit. So let's say trader A, follow trader B. Okay, so what will happen is trader A will receive not directly from trader B, but from the app message with the position the trader B took, and he can either execute it similarly or just use it for research purposes or whatever you want. But the idea is that trader A will not have automatic positions opened. Okay, this is information. It's information and it's not automatic trading. From the other end, copy, when you are copying, okay, another trader, then that means that you're going to get notification with the positions and it will automatically execute the positions. This is automated trading. This is following and receiving information. Okay, those are the differences. Copy and follow. Two different things. Naturally, before I'm copying somebody, I would personally want to see if it's good or not, and of course, do my own process. But there is no rule that you have to follow before copy or vice versa. Regardless, guys, I suggest you'll check the app because the app is very, very nice and can help you with a lot of indication resource for analysis. And it's really good to sometimes, if you're unsure about a strategy you're about to use, or you would perhaps want to have a new strategy, it's a great idea to follow someone, to have ideas, perhaps could contribute to your own strategy or as an addition. It's very useful. And it's download for free, so why not to try? Now, let's carry on with the web trader. There are some unique features here that I would like to show you to begin with. Let's actually take that. I think EverProtect, the features that I'm going to go through naturally will be found only on the web trader or the trading app and not on any of those. You cannot find EverProtect with MT4 or MT5, okay? So let's click it and go through how it works. Let's actually change the instrument we're using now, something a bit more straightforward to go through the product here. Okay, so as you can see, as soon as I click here on the box, there is a fee here, okay, a cost to, oh, one more thing, guys, one more thing. When you're using this interface, make sure that when you pick another asset, as you can see in the beginning, we were on AUDJPY. Oh, sorry, let me go back to it. AUDJPY, that was in the by default, and I have searched here gold, like that, right? And then I click on gold. It opens me the chart, but it doesn't change in here on the right side panel. Okay, if it wouldn't been open and then I would click, it would open. But right now, to change that, all I have to do is to click sell or buy. Let's go with a buy. And then it changes. But you saw that the numbers and the instrument name was not what we are looking at. It was differently. So don't be confused and then trade something else. Okay, so let's take the lot size to the bare minimum. Again, we're going to click here on the box, EverProtect, what it does. We're going to go through that in a minute. And you saw that as soon as I click here on the box, I have here time length that I can choose. So let's grow the time length, extend it by clicking here on the plus. You will see that the fee here that I'm supposed to pay will grow accordingly. We will understand in half a minute exactly how this product works, but I just want you to see how the fee works. Okay, so 1 hour when I increase, it goes along with the fee, right? 2 days, it's already 18 and not 6 anymore. Okay, and let's understand how this product works. So we already know that there is a fee, and we know that when we extend the time here, the fee is higher as well. So let's understand what it means. So we have a product called EverProtect. The way that it works is it allows you to protect the position. Okay, with for a certain time frame. whatever you lost during the coverage, you will get back. And there is a fee when using the product. That means that this fee will only be paid if I clicked here on the box. If I didn't, no fee. If I do, there is a fee. And how do we control it? We control it by, as you saw, that was 1 hour by default. We control it by extending here the time. So the longer I'll be covered, the more I'll have to pay. We also control it with the increasing or decreasing the lot size, the quantity, the size of my trade. So for instance, if I'll go for, let's say, let's take something round, instead of 0.01, let's go 0.1, which is 10 times more. So my fee increases accordingly. Let's go for 0.5, just as an example. So now it's much higher. Again, if I lower the time length, it reduces the fee. All right, so we understand it's very, very simple. The more you'll, the bigger the position, the bigger the fee. The longer the coverage, the bigger the fee. And as soon as you reduce, it goes back. And how, again, this product works. So let's read that again. It allows you to protect the position for a certain time frame. Whatever you lost during the coverage, you will get back. In other words, if I'm hypothetically going to design here quickly a take profit, since we are with a buy, which will be $20 higher, so that means 26.56 to 26.76, and the stop loss, let's make it maybe $20 lower. Okay, so we're looking at almost the same numbers. So potentially in this scenario, we can gain $22, or we can lose potentially $22. It's important to understand that both cases, there is no assurance that the market will travel to those levels. But I'm just, for the sake of the demonstration, placing it for you on the chart to see. This way, it's easier to understand how the product works. Let's paint that in green. It will be our take profit. In a minute, I'm going to explain also what take profit and stop loss are, and then we'll understand a bit better. So currently in this scenario, super simple. The current price is $26.53. We choose $20 higher and $20 lower to target the take profit and the stop loss. The way that it works is the take profit stops the position automatically when reaching the price. It closes it with a profit. This is why it's called take profit. Stop loss closes the position automatically when reaching that price and stopping it with a loss. And this is why it's called stop loss. So take profits, when triggered, close the position taking a profit. Stop loss, when triggered, if it goes down, closing it with a certain loss. Now, if this would have been the other way around, this would have been, if this would have been sell, it would be the other way around. What do I mean by that? When I'm buying something, my general intention is that it will go higher. That means that from the current price, I want it to go higher than that. Okay? If, for instance, and if it goes, the higher it gets, the more profit I'll make. This is why the take profit has to be in a higher point. When I'm selling something, my intention is that the instrument value will decrease. And this is why when I'm selling it here, I want the value to be lower. Okay, they are just the opposites. It works the same way, just the other way around. Buy means that the take profit needs to be higher, stop loss lower. Sell means that the take profit needs to be lower and the stop loss higher. Okay, you can see that if you click it, it offers you a certain number by default. Okay, that's the bare minimum that I can take. And then you can extend it to whatever you like. Let's just finish with AVA Protect so we can carry on. As you understood, the product, what it does is it allows me to protect the position. Let's choose 1 day. So in this scenario, I'll be paying a fee of 14. Okay, if it gets to the take profit, I'll make 22. If it God forbid if it goes down, I'll lose 20, and this is the fee that I'll pay. Keep in mind something very simple. The comparison between the fee to the profit or to the fee to the loss is something I'd recommend you to do. And the reason is, if I'll extend it to 2 days, I'm already at $20. $20 versus the 20 that I can make. Now, this is not too great for me because that means that the profit that I can make is almost as much as the fee. So that means that my intention to make profit needs to be compatible with what I'm planning to make. So this is an example would make more sense to pay 19, but to aim for a much higher profit, which leaves me with a net profit higher than what we saw before. All right, let's carry on. Any questions regarding Overprotect or anything that I've explained so far? All right, perfect. So let's carry on. This was Overprotect. As I said, it will be found in a web trader or on the trading app. Okay. It's important to say though that let me open gold quickly. I wanted to say two things. Unfortunately, Everprotect is a product that you can use with gold, silver, and currencies. Gold, silver, and currencies. You can use Everprotect, but this things only. Okay, so let's say Forex, silver, and gold. Okay, a few more things. When I cover the position, I cannot extend when the coverage ends. Okay, that means that if hypothetically I kept it for more time, I've covered it for 2 days, but I kept it for more time, I will only get the losses that I had during those 2 days. The remaining time, if I keep the position, I'm not getting the losses back, right? If I kept it for a week, is an example. Okay, I can only cover it from the get-go, cannot cover it when it ends. And there is expiry here to let you know when it will expire, and according to that, to design your decision. Okay, yeah. So as I wanted to say, there are a few features here at the left-hand side. So let's quickly go from top to the bottom. In here, I have the personal information. In here, I have trade. In here, I have positions, orders, history, signals. We're not going to go through that now, but I highly advise you to check it. It's really accessible and can assist you with, some additional indication for technical analysis, the way that it's constructed. Okay, again, we don't have time to go through that as well, so let's just carry on. In here, we have the news section. In the news section, you can also filter it by whatever you prefer. If you're more into commodities or stocks, you can just click it, go down the article, and here at the bottom, we have 3 related instruments that might have an impact from what we're reading here. Okay, if we go down to discovery, in here we have also some opinions, analysis views. We have also the market buzz, which can contribute some indication which instruments are more popular, more mentioned. That's how it's presented here in this interface. So if we click on Apple as an example, we're going to find this is specified to show you what was mentioned about this. There was 61, let's click it. There's 61 mentions related to the product release. Sometimes this could be annual revenue, sometimes this is earning announcements, sometimes different things. You can go through that. As in you click, you'll see it filter here to the right. Yeah, more than that, you can filter it by clicking here. Again, I don't want to go too thoroughly because I want to get to the second part, okay, which is the practical part. But this interface has a lot of content that you can use. Okay, and here you can filter here as well. Down at the bottom, we have here more some ideas, scenarios. In here, the economic calendar. There is a particular event that you're following. In here, you can also filter it by a bit differently. So there are a few. Let's choose dates. Okay, so one of the things that I can do is extend. Right now it's presenting the 26th. I can click here on the arrow, choose as an example the from the 2nd, let's say, to the 9th. So it will be this way from the 2nd to the 9th. So that's week forward. The way that it can be filtered is also by impact. So there are events, casual events that doesn't have a lot of impact on the economy. Again, they do have an impact, but not as significant as some economical decisions. So it's presented this way. We have the low, we have the medium, we have the high. And if we would like to, let's go up quickly. Let's suppose we only want to pay attention to the high impact events. We're going to click here on the high. It will present only the high. Same goes for, let's say, maybe just the light impact. Okay, so it's going to present here the low. Another way to filter is not only by impact. We can also choose a particular currency. And to do that, what you need to do is to click here on all countries. So nothing gets marked. Then click here on the arrow and then choose the particular country that you want to follow. Maybe you want to follow yen specifically. Okay, so when I click it, it's the only one selected. Then I scroll up and I see all kind of things here. You see that this is only the low, right? But if I uncheck this, then we get to see some medium, some high. So you can see, you can click it, read what it says here. Yeah, it's very, very enjoyable. Oh, one more thing. This is maybe, at least personally, I find it a very, very efficient feature. You see that when I click on, it doesn't really matter. I can do it from here as well, actually. You see there is a calendar here sign. I can click here on the calendar and then it lets me book it onto my calendar. And then I don't even have to go to the computer and check. I get notifications with the event, when it is, and I can specifically sit and do my analysis. Super, super efficient, really. Books it into the calendar. You can analyze that directly. All right. Yeah, I think that will suffice for us for the first part. And we can begin the second part. Gold is, let's do something, because we saw gold with EverProtect, and I want to diversify and show you guys as much content as I can. Let's perhaps choose from here. Let's see if something here will worth going through. That is very, very nice. Very nice. Okay. All right. So you saw that this time when I choose it from the list, it didn't show us anything else, right? Because I didn't search it from here. I choose it manually from here. So it shows the same instrument. Let me demonstrate quickly what would happen if you do it from the search. It's just something to pay attention to, guys. You see, if I do it from the search, it stayed on corn. If I do it from here, let's go with indices. So I choose NASDAQ here, right? But if I do it from here, and I go down to find Nasdaq, and I choose it as an example. I choose it from here. Okay, if I choose it manually, it's presented this way. If I choose it from the search, I just gotta make sure that I'm clicking buy or sell, so I don't accidentally, make my position on something else. Let's take it to the bare minimum. And this is officially, guys, the beginning of the second segment. Just a moment. All right, so we are looking at corn. Corn seems very interesting. Let's have a guide through just about the what's happening up here, and let's also go through the right-hand panel. I think it's a good idea to get rid of everything's written here. Leave it with corn, and let's talk about what we have here. So the search bar you already saw, right? You already saw the search bar here. We can click, delete, and just type whatever we want and pick it from the list. Okay, if we go into the right, we can change the time frames. So currently we're looking at daily candles. That means that every candle here is a daily candle. It's showing 1 day. I don't know that. I don't have any information from the candles with this default crosshair. You see that the crosshair here is just a simple crosshair, but if I follow the candles, nothing happens, right? What I need to do is I need to jump another one to the right. In here, we can change the layout, the candlesticks layout, if it looks like bar or line or candlesticks. If I jump another one to the right, I can change the crosshair. So from no crosshair, which we are at what we have now, if I click it and I change from no crosshair to crosshair, and I go through the candles, then I get information here at the bottom, at the upper left. See, there is a rectangle in here. Sometimes it's folded. Don't freak out. You can just click here. You open it. One more thing, if we click here, if we go to the right, we have here different layouts. If I want to see two instruments simultaneously, we can click here, then go to split it. It could be one above another instead of by another. Yeah, and to change it, if I would like to change it, to modify one of the charts, you see there is a blue rectangle frame around the chart. So that means that this is the chart selected. So if I would like to change what's here at the bottom, I'm going to click it. Then I have the blue frame. And with the blue frame selected, I can delete what is here. Let's say Nasdaq. Again, I put it in the search. I click it, opens me the instrument. Again, if I would like to trade it from how it looks looks like right now, I'm going to click it. When we have the blue frame, we're going to click here on the buy, and then we have here at the right end panel. You just click it, and when you select it, you click sell or buy, and it opens you the right end menu. Okay, let's go back. Currently, we don't need to be split, so let's go back to one. Okay, and if I keep going even more to the right, in here we have indicators. We don't need it now because we're going to use it in a few moments anyway. And if I keep going to the right, we have here an arrow pointing down. By clicking here on the arrow, we have a nice list with all kind of things to place on the chart, clicking it from the list, placing it on the chart, clicking it from the list, placing it on the chart, clicking it from the list, and placing it on the chart. And now we have a bit more visualized uh, picture of what we are dealing with. Just a second. Okay. All right. Now, if we are looking at corn, it seems like corn is it's been up for the past roughly week. Let's bring it back to the okay. Again, I can enable it anytime. Enable it anytime that I want. Just click here on the crosshair that I can. Okay, but the reason is that I changed it back is to click and drag now is easier without the crosshair on it. There is a slight chance that you won't be able to click and drag it up and down like me, because you must enable it by clicking on the column price, clicking and squeezing it down or up. And then it will enable you to move the chart up and down, not before that. Before that, it only goes like this. Only goes like this. And if you want to expand or minimize, you should scroll with a wheel on your mouse. Scroll with a wheel, increasing or decreasing, right? Lets you choose and analyze different time frames. Could be crucial sometimes. Okay, so you should be able to have a good grip and to know how to maneuver with it. If I keep going to the right, we already saw sell and buy. What it does is it launches here the right side panel. This right side panel is also split to two parts. We have here the order entry. To the right, we have the instrument details. In the instrument details, we have some indication how the instrument is built. Okay, the market sentiment, the buy price, sell price, the lot size, okay, how many contracts we have, and let's find it. The lot size, how many units in one contract, in one lot, sorry. The spread, the leverage, those are written outside as well. All of those things, these things, it's written outside as well. I'm going to show you the order entry. If I go a little lower down, we have here the swap and so on. Let's go back to the order entry. As I've explained, the lot size can be figured from outside as well, very easily, just by deleting what is here, putting 1 in the lot, and then it's going to show you that in one lot we have 100 units. Now we are with a buy, and we've understood from the beginning that when we are with a buy, our intention is that the value will increase. At the moment, we don't see anything to stop corn in the horizon when looking at days, but we should remember that the market is volatile. Okay, I'm going to abstractly target 450 without doing any prior analysis, just so we will have a rough idea where we are heading. There's a question here. Can you demonstrate how to follow or copy, or perhaps there is a tutorial from Mr. Gareth. So Gareth, what I've explained in the beginning, what I would suggest is download the app, download Ava Social, and you will enjoy wonderful, wonderful content there. Unfortunately, I don't have the ability now to open the interface and show you practically how it goes, but I'm sure that when you download it, you're more technical than I do, and it will be perfectly fine because it's very accessible, the app. Okay, I hope it helps. Now, if I carry on with corn, and we saw that the value that we've targeted is 450. Now, when I'm going to do some analysis, I'm going to compose this position specifically to what I need. And the way that it will work is I will select take profit and stop loss based on the amounts that I wish to make. And then if we'd have enough time, we would also explore some analysis from the charts. Now, when I'm going to do the analysis with natural understanding, the market is going to move and the price here will change. And it will also affect on the results that I'm going to see. Let me quickly show you here. If I click on take profit, what will happen is it will suggest a potential place for take profit, which is $4 higher. The current price is 432. So let's bind it to a specific price. I'm going to show you in a minute how to do that. Let's first enable the take profit and stop loss. We didn't choose any of those price. This is what the platform has offered. Let's talk about that guy for a minute. The function execute when price hits behaves like a selling stop or a buying stop or a selling stop or a buying stop. Okay, buy stop or sell stop in the MT4 and MT5 platform are both elaborated to execute when price hits. That basically means that when it reaches to a certain level, when it stops on a certain level, it's going to open the position automatically. It's going to launch it, reaching a certain price. Meaning, if I would like to target 430 instead of 432, and I don't want to buy it now at 432, what will happen is it will place a buy stop in here at 432, at 430, and it will launch my position at 430 and not at the current price, If I don't use this, if I don't use that pending order, and I click here buy, this is the price that I'm gonna get. Okay, my position from. If I do it this way and I take the 430, it will launch it when it gets to 430. I hope it makes sense. This way, I'm also binding the possible profit, and even if corn moves, I still see a precise number. Because I have bound my entry to 430. Okay, so let's keep it 430 for now. The take profit, we have absolutely no idea where we should place it. Let's say 450 just as an example. Okay, but if I'm being honest, guys, if I click here buy, I have no indication of when to close the price. Okay, I only know, Danny said in the beginning of the webinar, Danny, that's me, right? That if it goes higher, we are going to make a profit. But the problem is that we don't know how much profit. So that means that we also don't know what potential price to close the position, right? And this is something I would probably want to know. I would want to have a target that if it reaches that target, I close the position, right? Hypothetically, if I took here a buy and I go to my positions, and in my positions I see 100 or whatever my target was, I click here on the X and then I get my 100, right? When I don't have a target, what indication will I have when to close the position? I'm based on analysis, which is great, but again, this is probably something I would want to know, because then I know that holding the position for a certain time frame will benefit me the number that I want. Okay, if I don't have a target and I go for 450, okay, as an example, let's say 450, I'll make this much, okay, but then I'll have another problem. How will I know that the 450 is realistic? Okay, maybe it will turn around beforehand. Look at all the okay, so we had 5 days when corn goes only bullish, but in here, okay, sometimes it's bearish and I don't want to get tangled and lose. Okay, maybe in here it's going to flinch down a bit, who knows? So how can we know that it's realistic? We must find a way. Okay, so to begin with, we have a target. Target simplifies for me a potential price. If it gets to that price, if I got to my target, I can just close the trade. So let's set the target here to be $1,000. And the second thing that I'm going to mention is the time. And why? Because if I make $1,000, but to get to here, it will take it a month. Okay, let me review quickly when was the last time that it's been here, right? So let's place a timeline. Let's place a timeline. Even this, it's today, right? 18th of June. 18th of June. That is roughly 4 months back, right? If I'm not mistaken. And I don't feel like waiting 4 months to make $1,000. So this is the statistics that we see now. Okay. Now, if I take it a step forward and I understand I can look at the previous price and I want to know if 450 is a realistic price, I need to know during what time I estimate it will get to the 450. During what time? Will it take it a day? Will it take it a week? Will it take it a month? Will it be only next June? Maybe, who knows? So we need to schedule a time. Let's suppose that we don't want to hold this position for more than a week. Okay, and let's also target the movements. Currently, it's a question mark. Okay, let's also find the target, the movement. Okay, how much it can move. So one thing that I can do is I can enable the crosshair, go with the crosshair. Each candle here is syndicated to 4 intervals, right? We have open, close, high, and lows. Those are basically the beginning of when the market is started, when the market is closed, what was the highest and what was the lowest price. Okay, so if I'm quickly gonna go 424 for the open, 428 for the close, 432 for the high, and 421.5 for the lows. And then I can quickly just subtract between them and see, okay, the beginning was 424 minus 428. So this is only between the results. And between the highest point to the lowest point, we have $11. Okay, so that means that this guy over here moved $11 from bottom to top and $4 in the colored area. However, using this primitive manual checking is not really effective. Why? Because to include to have an average, I have to include more than one interval. I have to take not only this guy, but that guy and the previous few candles. I need to have a bunch, and that takes some time. So we need something to estimate how much the potential movement, the average movement that corn can make per. We are on day. We should match the validity to weeks. Okay, and when in weeks, we can see a completely different picture. And we see that it might be in a reach. Let's bring it back to what we saw. Okay, and those are weeks. And to start getting the numbers from each candle takes time. So what we can do is we can click here on the FX indicators. Then in type to filter, we're going to click here, go AVE for average to rule range. We're going to click it, drag it to the right. And now we can select how many candles the ATR is going to analyze. Will it analyze 14 weeks? 14 weeks, that's somewhere around here. Maybe it will analyze only, just a second, only 5. Okay, as an example. We can also change the color here, click save. Okay, so if it analyzes 5, that means 1, 2, 3, 4, 1, 2, 3, 4, 5. Maybe that's better because this is a different segment. The size, the shape of the structure in those candles are different than those candles. So when using the ATR, I would like to range a certain time frame which is realistic. And I don't want to go too far back because again, you see that it looks different, right? It looks different. I want to have something recent and useful. So 5 is quite all right. Let's see what the ATR is. So this is based on few 5 candles. The average movement for current per week is 18.1. Therefore, we're going to do this. ATR equals 18.1. Okay, and I'm going to go for a PAM of 20. The reason is PAM stands for potential average movement. That means that this is potentially the average that I'm expecting it to make. It means that it's an average of mine and not a specific average calculated from the previous 5 candles. I can round it up, I can round it down, and I choose to round it to 20. Currently, we have 3 out of 4 ingredients. The last piece of this puzzle is to know how many units we need. Now, if I'm going to go with 0.01, which is the bare minimum for a lot size, and I'm going to target 450 hypothetically as we said in the beginning, I see that this is $20 higher. $20 higher means that I'm going to make $20. How does that work? Because I only acquire 1 unit and I'm buying it at 430. Remember, we have placed this in the beginning. 430 was the entry that we defined. If not, our entry will be this. So with 430 to get the 450, that means $20 higher, I will acquire $20. If this would have been 10, then I would make 200. And if this would have been 1 lot, I would have made 2,000, right? From that, we understand that we can simply multiply the units by the movements, or we can divide the target by the movements to have the units, and then we would know the necessary amount. So this is one version, right? Version 1. And we have target divided by movements equals units. That's version 2. Now, if we will quickly divide 1,000 by 20, how much is that, guys? Let me see who is quick enough. 1,000 divided by 20, guys. Let's give you 5 seconds. Very good, Michelle. So we have Michelle giving us the right answer. Garrett easily. Who else? Rajan, you included the equation as well. Very nice. So all 3 of you guys are correct. And that means that if we quickly gonna go 1,000 divided by 50, sorry, I gave you the answer. 1,000 divided by 20 is definitely 50. Let's see that everything match. We're just gonna slice that by half, make it 50, and perfect. Just perfect. We can make a flat 1,000. And let's also simulate the stop loss with the same length, vice versa. So instead of $20 higher from 430, we'll make it 410, which is $20 lower. $20 lower gets us the same result. But what if I would want to fix this ratio to be, instead of potentially 1,000 and 1,000, let's suppose that I want it to be 1,000 and 250 is an example. Okay, so how we can do that? We can quickly put the composition details here. The entry 430. Okay, take profit, we said 450, $20 away. And we have the stop loss 410, $20 away, which can give either $1,000 profit or loss. And now when I'm making this comparison, we can simply look in at the 1,000 at the 1,000, and this would be 10%. This would also be 10%, and we wish to make it 2.5 for better risk money management. How do we do that? First of all, let's understand how we get to 2.5, right? So to find the exposure of my position out of my balance, all I have to do is to go potential loss divided by balance equals X, and then X times 100 equals exposure percentage. Okay, that means 1,000 divided by 10,000 equals 0.1, and 0.1 times 100 equals 10%, right? Let's look at it together one time. Okay. Now, how do we make it 2.5? Super simple. All we have to do is just to minimize the length between our entry to our stop loss, basically by increasing here the value. I keep on clicking just like this, click on the plus. Okay, so we've gotten to half. Now we are $10 away. If we keep going like that, okay, we see we are now $5 away, and we've $5 away thanks to this equation. Let's try that. 5 times 50 equals 250, right? Which 250 stands for 2.5% out of my account. Now, how do we know that we have enough capital to acquire this position? How do we know that? We know that by something called margin impact. And the margin impact is the necessary amount to open the position. Meaning that if the price now is 430, or at least the price we wish to buy is 430, times 50 units equals 21,600. Okay. Okay, and here it's 600, but that's the difference. So we have price per unit times units equals value, and then we have the leverage here in the middle. Okay, and then we can just a second, multiplying buying and selling. Okay, and then we can divide the value by the leverage to have the margin impact. Let's do that first. 21,500 divided by leverage of 1 to 33, so that's going to be 21,533. That will be 641. In here it's 648 because it's 432 and not 430. But you will see that if we will divide our number, it would make more sense. Oh, sorry, 51. Yeah, always use a calculator and not calculate in your head, right? As a precaution. All right, perfect. So let's look at what we have now. Let's recap. Look how beautiful everything just makes sense. That's just great. Let's extend it a little higher. We'll push this guy to, oh, it was where it's supposed to be. Okay. Let's red one. That's 40, 45, 25. Let's make it red. Yeah, perfect. Now let's have a look at a little bit before just 2 minutes that I'm going to say something about the analysis that was done here. Let's recap what we have. So to begin with, we looked at the general trend. We looked at days. Days seems a bit different. Okay, when we looked at days, we've understood it still has potential to go higher. From that, we estimated a certain target, so we will know when potentially to close the position, and not just a general buy, but specifically to target the price. We then saw how realistic the price is when we are using the ATR. it shows that it can move 18 per week. Okay, and then we can compare it with the current price. If I'll add 18, which is the ATR on top of my current price, we will have the exact number. Okay, and then from that we've understood that it's realistic. Thanks to the ATR, it can move there. And then we divided the target by our movements to know the necessary units. And now we have a well-composed position. We know that if it gets to the take profit, we'll make 1,000. If it gets to the stop loss, we can lose potentially 420, which is a ratio of 1 to 4. And then we can do the analysis now before we launch the position and see that everything makes sense. So on top of the composition, there is a layer called analysis. Analysis is divided to fundamental or technical analysis. We're not going to do any of that now, but I will explain to you the logic of how it works. So you saw that I have marked certain lines with the price line, the horizontal line. And the reason for that is those are peak points on the charts which can potentially hint me for a reversal. Okay, now that means that those certain levels that we have, okay, are things that we can place. We can place them on the chart, and we can assume as an example, if this would have been just a second. Okay, so let's take that guy as an example. Okay, and push it up to 476. I can assume that corn will turn around either around that area or realistic around that area. How come? Because it's been there. It's been there around 4 months ago, and it was consolidating around those levels. That means that this potentially is a strong level for corn. Before that, we have those levels. As you can see, 452 is actually above the nearest resistance, which potentially I think that it might get to. So I can also mark it. Okay, 442. You can play with that. Unfortunately, we have to say goodbye, guys. We don't have time for analysis, but I'm very happy that we could make the composition part, because once you have this done and you have the system going and you have the equation written, if you would like to apply the same principles you've learned with corn to anything else, you can do that just as easily. You can do that just as easily. And the same composition I used here, the same numbers that I have here, if I will try it on corn next week with the same numbers, the only thing I would probably want to modify is the ATR, because the market doesn't stay the same and the tendency doesn't stay the same. So it makes sense that the average doesn't stay the same. But my target doesn't have to change, my time length doesn't have to change, and my units doesn't have to change according to the movements. All right, guys, it's been a pleasure. As I said, we have to say goodbye. I hope that everybody learned at least one small thing from the webinar. Would like to welcome you to join us to next week webinars. Tomorrow we're not going to have the live Q&A. I have to give a lecture somewhere else, so unfortunately I won't be able to give it. I apologize in advance, but I'll see you the following week. I wish you all best of luck with trading. Have a fruitful week and have a good day.